Hello, good morning, good afternoon, good evening, wherever this finds you. My name is Richard Coe, I'm Managing Director of Wingx, and I'm going to give you a short presentation on global business aviation traffic trends in 2020. So these are a couple of the questions that I'm going to address today. How business aviation has evolved, particularly in comparison to scheduled aviation, and what robustness that displays. We're going to look at business aviation activity by different regions, from different airports, different connections, different airport pairs, by different aircraft platform, and by different types of operator. And we'll conclude with a speculative view of where the market might go in the next 12 months. I want to start with this short animation which captures on a weekly basis the number of business aviation flights there in the orange and compares that to scheduled aviation. And obviously over the first 2.5 months things were pretty much normal. Then we saw the precipitous drop in flight activity due to the lockdowns principally. And after a fairly short trough, we've seen some robust recovery in business aviation traffic. You can see in the orange line there, with scheduled aviation still well below par. In fact, over the May-June period, as we've shown here, BizAv has been down by about 46% and scheduled activity by almost 70%. Another way of looking at that is business aviation flight activity as a share of all fixed wing. So that includes cargo, hybrid, and scheduled. And what the black line on this chart shows is that business aviation, according to the right-hand axis, has picked up a share of 28%, having been at just 13% at the start of March. So as these three little circles show, the purple shows that business aviation flight activity was just 13% of all flight activity globally, fixed wing flight activity, and has climbed to almost 30%. So another way of looking at the resilience of business aviation activity is in terms of the activation of the fleet. That is as we've charted it here, the proportion of last year's active fleet, which is operational during this period from March to June. So the horizontal line is the benchmark for 2019. And the blue and the red show the 7-day rolling average in terms of proportion of that fleet engaged in operations. So business aviation has shown a recovery up to 60% of the normal levels of fleet engagement, with scheduled fleets still 70 or 60% below. And if you look at that on an individual operator basis, it's interesting to see the variation. We've actually seen FlexJet, for example, employ more of its fleet during this period, March to June this year, than last year. NetJet's at about 72%, VistaJet at about 85%, and that compares to Lufthansa, which is a little bit above average for airlines at 43%. During this period, in terms of utilization, we've seen BizAv activity per aircraft drop from 25 to 15 hours. That's during the month of May. So that was a 41% year-on-year decrease in asset utilization. I'm going to have a look at activity by region. So what this series of charts shows is that business aviation activity has shown a pretty robust increase during a trough in North America and increasingly in Europe. So this black line is showing the rolling 7-day average. And you can see that for June, although Europe is down by 43% in the first 23 days of June, or through mid-June, the black line has quite an encouraging shape in terms of its recovery. Other regions, certainly in Oceania, we've seen most of the previous activity already stabilize, but in Asia, things are cooling off in terms of business aviation activity, around 28% down in June. South America is less affected, at least so far, just 12% down on year, and flight activity out of Africa, BizAv flight activity trending 42% down. By country, what we're seeing certainly in Europe is some variation, with a stronger recovery in Germany and now in France and Italy than in the UK and Spain. But in all these countries, the blue line shows BizAv 7-day rolling trend versus the black line, which is the scheduled activity 7-day rolling trend. And the BizAv activity is clearly picking up faster than scheduled. In the US, we've seen some variance in flight activity recovery, with Florida in particular, and to an extent in Georgia, some quite strong recovery in biz av activity, but in California and New Jersey, it's really a pretty similar shape to scheduled aviation activity. It's so far very weak recovery. If we look elsewhere around the world, we've seen China, which obviously took the first outbreak of the virus, pretty much pick up on previous levels of flight activity. Whereas in Mexico, UAE, Saudi, we've seen a precipitous fall and really not very much activity recovery so far in BizAv and of course certainly in scheduled flight activity, the black line. If we look just at June so far, then we see that the US, as we would expect, is by far the busiest market for business aviation flights and flight hours, and is trending just over a quarter down year on year. Canada, by contrast, is quite a lot further down so far in June, 37% down. Whereas there are outliers like Australia, which are pretty close to normal activity. Brazil also fairly close. Other countries lagging behind, as we saw the UK 61% behind in the month of June in terms of BizAv sectors flown. If we look at connections between countries, almost all the flight activity has been domestic during the recovery period, and that certainly also applies in June. And that's where there really is some signs of full recovery almost. Germany within 1% of normal flight activity. Cross-border flight activity is still some way off. Mexico, US is the busiest cross-border activity, and that's still down over 30%. Coming down to the airport level, and here the view we've taken is on fuel. So we're comparing fuel uplift and a decline in US gallons, Jet A1, during the March to June period at two airports with quite contrasting trends. So Palm Beach in Florida has seen a 15% decrease in fuel uplift, which registers just under 1.5 million US gallons. Whereas Teterboro, we've seen a 44% reduction in the modelled fuel uplift during that period through March through June, much more severe, 11 million fewer gallons picked up during that period. Now looking at flight activity at the busiest global airports, and they are all US based, and we can see that some airports, particularly in Florida, have seen in June a really quite impressive pickup in activity. So Palm Beach, for example, at the top there, has seen almost 50% increase in flight activity so far in June compared to the same period last year. Other airports, in particular Teterboro, even through June, are almost 70% down in flight activity. If we look over at Europe, we can see that leading airport in Le Bourget and likewise with Nice still really suffering, 60% down almost. The Swiss airports are showing more robust recovery, between 30 and 40% down, and there are even some outliers, Istanbul and Belgrade, which are actually showing some increase in activity in June compared to June last year. Has flight activity or the patterns of flight activity from airports changed? Well, this is a picture of pairs operated from Luton during the month of May, with the top chart May 2020 and beneath that May 2019. And what you can see here is that that entire corridor of London, Paris, Milan, Nice and the rest of the south of France has been lost during that month of May. So whether that comes back sooner rather than later, we'd expect it to come back this summer, but certainly that is what's mainly characterising the slowdown at the key hub airports. I want to look at different aircraft types now, and this has been talked about quite a bit, the shift to smaller aircraft, to lighter aircraft during the period March through June, and that's represented by the red and green line, where we can see there's been a sort of quite concerted recovery, and that compares with a more lackluster recovery for the mid-size and certainly for the large jets, the blue line at the bottom there, showing much less recovery during this period. If we look at that in terms of our aircraft segments in June, so in the recent period, we're seeing much the same pattern. So if you look at heavy jets, that activity is down by 44%. Look at ultra long range, is down by 50%. So this is a global view, 50% in June 20 versus 19. Whereas if you look at entry level aircraft, they're down by just 20% year on year. Bringing this down to aircraft types, unsurprisingly, we're seeing a lot of activity moving around on prop aircraft. Of the business jets, it's actually the Challenger 300, which is which has shown most activity so far this month, and that's trending just over 20% down. There are a couple of aircraft types that are pretty close to normal, and again, this is a global view, and we can see that that for the CJ3 and Nextant, we're pretty close to normal levels of activity. If we translate this into OEM platforms, so the Textron the Textron fleet, and this is so far this year, January through June, has lost effectively 400,000 hours, so 400,000 fewer hours flown during that 6-month period than in the first 6 months of 2019. Although that translates to 30% drop, which is not as severe as Gulfstream, which is 38% down, and Dassault, which is down by 41%. That's in terms of flight hours so far this year. And in these charts, the blue represents 2019 activity, and the purple line, the magenta line, is showing the 7-day moving average for the 2020 period. If we look at some other OEM fleets, Embraer and Pilatus stand out because their flight activity is really down by a quarter or even less. So the recovery is rather more robust there. We've also noted that Honda jet activity is down by just 7% globally. And indeed, Cirrus Jet is the only OEM fleet platform that's shown some increases, up by 37%. Taking a look at operator models, and we're looking now just at June, so the first half of June 20 versus June 19, and we're seeing that it's actually aircraft management operators which are showing the most robust recovery so far, just for this period, down by 20%, which probably reflects the freedom and scope for aircraft owners to move around, probably to secondary residences. Whereas the charter market and the fractional market overall is trailing by about a third. If we just look at the branded charter market, we can see much the same pattern that we saw in overall aircraft segments, with the ultra long range segment in terms of flight hours. This is branded charter flight hours down by 50% year on year, and that contrasts with light jet charter hours down by, you see them here, just down by 30%. We take this down to a specific operator level, and again, now we're looking at Jan to June, so the first 6 months. We can see that NetJet's activity has suffered, is down by 30% during that period. Interestingly, FlexJet activity is up, so clearly they've found a way, probably through their consortium of brokerage and operational companies, to find some increase in year-on-year flight activity. ExoJet is also slightly up. Globair is one of the more successful operators in Europe, and with a fleet of 20 Mustang aircraft, its activity is down, but only 18% for the year, which compares favourably to most other operators. It's worth taking a quick look at Globair because their operational information may give us some clues as to what the post-COVID operating environment is for operators. So we've seen that Globair's flight activity so far, March-June, during the crisis period, we've seen things like average sector length go up by 40%, passengers on board going up by 15%. Interesting that they've reported that requests per day are up by 72%, so obviously a lot more interest coming to them. We've seen clearly some damage to their operational results. There's 33% reduction in flight hours, 40% reduction in hours per aircraft. They've had to do a lot more empty legs, 44% increase in empty legs. But the result has been that during this period, their market share has gone from 36% to 49%. A couple of other things interesting which have changed. They're now doing 56% of their sectors as one-way trips, and they have increased their retail sales in terms of number of trips from 42% of all sectors to over 60%. I want to conclude with a few speculative, at this point, observations around the outlook for business aviation activity globally. I think one of the important factors is obviously whether restrictions get reimposed as further virus outbreaks materialise. And that's why we've put this chart up here, because what we're looking at is arrivals into the UK. Business aviation is scheduled arrivals into the UK through, in particular through June, because what you see is that on that right-hand chart, the UK saw some fairly robust recovery in BizAv activity even through the lockdown period. And then when the quarantine got imposed on June the 8th, there was an abrupt curtailment to that trend. So that shows how directly any optimistic forecast may be affected by the reimposition of travel restrictions. Another view that endorses this is from China, and this is a view of flight activity, BizAv flight activity out of Beijing. And just through June, we saw at the middle of June that there was another outbreak in Beijing, and there was some restriction, some further lockdown. And during that second period of June, since that incident, we've seen a 75% reduction in the number of departures. I think that many of these issues will be widely discussed during this conference, so I don't want to dwell too long, but I think in our view, there is, as much as you can say the glass is half full, there seems to be a fairly reasonable counter argument that indeed there are good reasons for pessimism. We don't know what's going to happen with the virus. If treatments come into play and even a vaccine sooner rather than later, that's obviously going to be an important stimulus. Whether governments will continue with very severe lockdowns, that's clearly going to curtail travel demand. How big the economic shock is going to be, and on the optimistic side, whether indeed we're able to see a V-shaped recovery in economic output, which is clearly going to be linked to further aircraft utilization, BizAv demand. And importantly, what's going to happen to customer behavior? And I think there, what we might see is customers deciding that business aviation is the most hygienic option, or certainly preferable to flying commercial, and that induces some stimulus for BizAv. At the same time, an extended or increased hygiene concern is just going to increase those numbers who simply step away from travel altogether in the near future. Optics is a really important issue, I think, because in the past 10 years, certainly after the GFC, we saw a lot of corporates step out of business aviation due to the negative optics, particularly around luxury, and then more recently around the climate issue. If we see business aviation emerge as an absolutely necessary part of aviation connectivity, transport connectivity, as airlines tend to drop their connectivity, we may see business aviation lose some of those negative optics and become a much more attractive and acceptable option, certainly for smaller businesses and entrepreneurs. I think the stigma will remain there for the large corporations, especially if the economic shock is very large. So how might we see flight activity materialize over the next 12 months? I think what we're showing here is, I would say, a glass half full outlook for business aviation activity compared to the last 5-year average month to month. So we're seeing very, very big drops, obviously, during the peak pandemic phase, and then, pending a suppression of the pandemic, we could see flight activity during the summer come certainly within 20% of normal levels. I think we're quite likely to see some kind of secondary wave, certainly an economic secondary wave, coming towards the end of the year, and that will push traffic back again. But after the first quarter into the second quarter next year, I think it could be reasonable to see a comeback in business aviation traffic around then. So that would position, as we're showing on this chart, a 12-month rolling activity level that is not dissimilar in its recovery to the recovery we saw after 18 months from the global financial crisis. Obviously, the virus started as a major exogenous shock, much as 9/11 was. The difference was, with 9/11, even by January of 2002, we saw rolling 12-month positive trends, and the repercussions of COVID are so complex and severe that we won't see that. But we are reasonably optimistic in seeing that after 18 months, rolling 12-month trends could be recovered again. Thank you very much for your time, and I look forward very much to your questions.